The EU has delayed its counter-tariffs against US imports for 90 days following yesterday's U-turn by President Trump on higher global levies. Taoiseach Micheál Martin welcomed the decision, saying it was the correct approach given the possibility for negotiations with the US. However, Washington's trade war with Beijing continues to cause volatility on global markets.
Markets around the world remained highly volatile today. The chaos over the past week and concerns about a potential US recession haven't receded. That was despite President Donald Trump trying to calm things down last night. He announced a reduction in tariffs to 10% for most countries. That was to allow a 90-day window for negotiations. The decision got a cautious welcome from the EU.
We want to negotiate. We want to talk. We appreciate that you have brought this pause on so-called reciprocal tariffs, and we in turn are now pausing our proposed countermeasures.
There was a sense that this would end up in some negotiating process. We hope that still remains the case because it's difficult to be definitive right now. And but I also do believe that the bond markets were influential.
The Irish Exporters Association says Donald Trump's U-turn on tariffs happened as the markets sold off US government bonds in a highly unusual move, and that brought America closer to a self-inflicted financial crisis.
When you do that, it shows a complete lack of faith in the country itself. And it's very, very serious. Like, we were really on the precipice yesterday. And that is the reason why there was a change of mind yesterday.
While the 20% tariff is off the table for now, most Irish exporters are looking at a 10% additional duty on any goods they sell to the United States. And there's still the threat of a specific tariff on pharmaceuticals, and that's Ireland's biggest export to the US. For other EU countries, there is still a 25% tariff on steel, aluminium and cars exported to the US. But Donald Trump is continuing to keep the pressure on China with an enormous 125% tariff on top of an existing 20% duty. Today, Beijing said it was willing to talk to America, but it warned that pressure, threats and blackmail were not the right way to deal with China. This trade war is far from over. It's just entered a different phase.
And David joins us now, along with our Europe editor, Tony Connolly. Tony, to you first. The EU has now been given 90 days to negotiate. So what's the plan?
Well, the message from Brussels is really, look, we are ready to negotiate. They've offered to the United States a zero for zero trade agreement or understanding. So instead of pushing tariffs up, bringing tariffs down to zero on both sides. Now, they said that that would apply to a range of industrial goods. And this is an offer they've had on the table for some time. But a suggestion today from the Commission that it could go beyond simply industrial goods. So you can see they're trying to entice the Americans back to the table. Whether or where the European Union sits in the pecking order for the Trump administration is another question. You'll remember the real animosity expressed towards the European Union by Donald Trump himself and by J.D. Vance, his vice president. One valuable lesson that the Europeans will have learned is that in a market panic, Donald Trump will blink. And that was the case yesterday. So there is a floor for the chest-beating rhetoric and negotiating bragging that Donald Trump has exhibited to date. So that's a valuable lesson for the Europeans. A few late-breaking items just to share with you. The European Union today said they would start negotiating with United Arab Emirates on a trade deal. Also, Handelsblatt, the German newspaper, saying that the EU and China are going to start negotiating on lowering tariffs on Chinese electric vehicles. So that's clearly a signal to Washington that the European Union have fish to fry elsewhere.
All right, Tony Connolly from Brussels, thank you for that. David, it looks like Donald Trump has taken on the markets, but has it backfired?
Well, I think it has to a certain extent. So really what we're seeing now this evening is that while Donald Trump tried to dial down the temperature yesterday with his announcement, he hasn't gone far enough. So the US is still trying to impose the largest tariffs that have ever been seen in the past 100 years. And there are still fears of a US recession. This evening, the markets are down, the stock markets are down in New York, but also the dollar is being affected. Yesterday, we saw big problems on the bond market, whereby the cost of borrowing for the US went up, and that raised the threat of that bleeding through to the mortgage market, for home loans, and also for consumer loans, car loans. And that's where the US consumer would be really affected. As Tony mentioned there, essentially Donald Trump is now responding to the pressure from the markets, but the markets are more or less saying, you've got to do a bit more. We need more reassurance. The problem with market jitters is you can't just put them back in a bottle when you want to. Once they're out there, and the expression in the markets is the trend is your friend. And if people are selling off, they continue to sell off because they don't know where the floor is. So he's now in a tricky situation.
Economics and Public Affairs Editor David Murphy, thank you. Well, let's hear more now on the impact of President Trump's latest tariff pause. We're joined by New York Times reporter on the markets, Maureen Farrell. Thanks for joining us this evening, Maureen. So how has Wall Street reacted to President Trump's pause on tariffs for now?
So yesterday, what we saw was elation, basically, in the market, relief, and there was a huge rally in stocks all across the board. Today, reality to a certain extent has set in, and there's been a sharp sell-off. I think at first everyone was just happy. The markets, there was relief that with this 90-day pause. Today, I think there's an awareness that there's still in the U.S. a big trade war with China. President Trump announced that the tariffs were actually at 145% on Chinese goods. And the U.S. buys so many goods from China. There are just real questions of what this is going to mean. And I think the market is really digesting that today in a way that the market was not yesterday.
Why do you think he did this U-turn? Was it because the bond markets were looking in trouble, or was it because he always intended to negotiate on tariffs?
We've heard both things coming out of the White House, but what my colleagues and specifically heard was that there was a real concern, and he said this too himself, that President Trump, was that he was worried about the bond market. You know, they didn't want to really kick off like cataclysmic activity in the market, and we were seeing the 10-year bond, especially, what people seem to be watching yesterday, and there was a huge sell-off in it. So that did seem to influence him, even though some of his advisors said, this was the art of the deal. This is what he was always going to do. So there's some mix of all things, but the market definitely contributed to it.
As you say, this isn't a full reprieve because tariffs of 10% have still been placed on all products. China's facing tariffs of 145%. How is that going to hit consumers and businesses?
I think it's really hard to tell, and that's what economists have been saying today, yesterday, even after this pause, that it's going to take a few weeks at the very least to see how this affects prices, how this affects global supply chains, because China has announced both retaliatory tariffs, but also, it's going to reroute some goods into different parts of the world. So it's going to take a while to figure out exactly what this means. And I mean, there was good news today in the US for the moment on inflation. It was lower than some economists had predicted, but that could clearly change very soon if prices go up with these tariffs.
So much certainty still remains on the markets, which of course the markets don't like. So do you think they'll be as spooked next time when he announces something else? Because it changes day by day, doesn't it?
It's so hard to tell. And I think that's what I hear from investors and traders that I talk to is, there's no visibility. At least last week, people said the sell-off, which was huge when he first announced these tariffs on so-called what he was calling Liberation Day, when President Trump at least gave a warning that tariffs would be announced. I think people were really shocked by the size of them, but at least there was some planning. Clearly yesterday, this came out of nowhere and caught the markets so far. It caught everybody really off guard, including some of Trump's own aides. So it's really, I think the question now is, how do you prepare when President Trump can change his mind so quickly? And that's the question that traders, people in the markets don't seem to have good answers for.
All right, Maureen Farrell, there's a lot more in this over the next days and weeks and years possibly. Thank you for joining us this evening.
Thanks so much for having me.